What's up? What's up? What's up, everybody? How you guys doing? It's Jeremiah Davis, the funding coach, coming to you today with Monday Fun Day, giving you guys funding tips. All right, today's topic is going to be, does your business qualify for funding? Now, this is a hot topic because I get a lot of people coming to me for funding. And they want business funding. That's the first thing out of their mouth. And, my business name is Business Funding Now. So I can understand that. But last time I told you about how many different types of business funding there are. Well, you still have to know what the type of funding for your business you qualify for, or rather research the type of funding that you need for your business. Because with every different type of business funding there is, each one of those types have a different criteria, from credit to time in business to industry type. So there is a wide range of business loans for different purposes for different businesses. And then there's some funders that specifically focus on niche markets, niche business markets. Okay. So knowing that information, so it's not like a generic template that you can just go and apply for business funding and get approved immediately without, any due diligence. Okay. Because you can go to this lender and this lender will get like, no, we don't do that type of funding, or you don't qualify for this type of funding. So knowing what type of funding that you qualify, that you need, that's going to work for you and your industry, as well as who to go, what lender to go to for that particular funding product. Okay, so for example, something I use quite often is, equipment financing, equipment leasing. Both of those terms mean the same thing: equipment financing, equipment leasing. But there are a large range of lenders that work in that space, and each one has a different criteria. Now, the ones I work with generally do not accept or do not require you to put up collateral. I have worked with some that want you to leverage your home as collateral for the loan. So the equipment should be the collateral, but they want more than that. Okay, so I stay away from those type of equipment lenders, but their criteria is specific, right? The ones I work with, I can give you their criteria, right? So if you want a dump truck, a tractor trailer, a food truck, restaurant equipment, even if you just want, say you want to buy Escalade to do a transportation business like limo service or something like that, there's no real things that they will not fund. My experience as the lender that I work with, they don't like to do anything under $50,000. And the reason is they don't make a lot of money on, equipment that is less than that. I've done some around 40, but the higher, the better. So I tell people, if you want 2 trucks, apply for 2 trucks. Okay. Don't just apply for one thinking and trying to get approved, because they'll come back and tell you, well, we won't do one, or we might be able to split them up and get you 2 different loans for 2 different lenders, for one for one truck and one for another truck. I've had to do that before. So there are ways to get there. Now, the main criteria most people think is credit. For equipment, and just in general, all funding in general, there's always going to be collateral. Okay, you always have to have some type of collateral or some skin in the game. All right. Generally, for traditional business funding and traditional personal funding, your collateral is your credit and your cash flow or your income. Okay, but almost all other types of funding, they're going to want you to put 10 to 20% of the down payment, or have something else of value that they can use as collateral. So just first of all, always have that in the back of your mind. What type of collateral do I have? What type of collateral am I going to be able to offer this lender? Okay, so back to the equipment. So on the credit. So they're not even really looking at the credit. They look at it. Obviously, if you got a 500 credit score, you probably ain't gonna get approved. But I have gotten people approved at a 580. Okay. Now, obviously, they have an unwritten guideline that if you have a 620 or higher, then your interest rate is going to be lower. So that's your benchmark that you want to shoot for, is having a 620 across the board. But obviously, if you got a 660, 680, 700, you're more your chances of getting approved increase. So then the other thing that they're looking for, this is the standard protocol with my equipment lender that I use. They want you to have in the business account, you need to have at least 2 to 3 months, 3 months preferably, or more business statements with the cash flow going into it, because that's where they're looking to see if you have the money to cover the payments as well as the down payment. So my equipment lender requires that you put the first and last month's payment down for that equipment. And then you also have to have money to get insurance, say if it's a tractor trailer or a dump truck or some type of vehicle. You have to cover your bases, right? Because they're not going to let you drive off the lot with the vehicle if it's not insured. All right. And then after that, you just make regular monthly payments. And let me give you this also. So on that type of on $100,000 piece of equipment, your monthly payments are about $2,500. So they're looking for you to have at least 5,000, 10,000 to say roughly in the bank. It doesn't have to be like just sitting there. It's like in the savings or anything, but in cash flow in your business, right? That you have the resources to make these monthly payments, right? And then you're paying $2,500 a month on that equipment for 60 months. At the end of 60 months, it's a dollar buyout and you own equipment outright, just like a kind of like a car note. Okay. They will pay the lender or the dealership directly, right? Once all the documents are signed and submitted, and the dealership will give you the keys and you drive off. Obviously, if it's a tractor trailer or dump truck, you have to have your CDLs. You have to, everything has to have all your ducks in a row. Okay. But that's one type of business funding. Let me give you the criteria for traditional business funding. Traditional business funding, everything is still going to be weighed heavily on your personal credit, and then with business credit, you have more options. You have more resources to go apply for different types of business loans with business credit. Okay, but it's not, people who don't have business credit get business loans. That's the point I'm trying to make. Some people are coming to me asking for business loans, and because they've established business credit, but they don't have the rest of their stuff in order. Like, they don't have any financials. They haven't been in business long enough. So, what is the criteria for traditional business funding? I'm glad you asked, and here, let me give it to you. The first criteria is you have to be in business for 2 years. That's it. Yeah, you have to be in business for 2 years with 2-year tax returns, and your business has to make $100,000 a year. Now, $100,000 a year is not a lot, because that's less than $10,000 a month, about $8,000 a month. So if you're in business, hopefully you're doing at least that, but having the rest of your financials in order for the last 2 years, as well as having good personal credit. You got to have good personal credit. You got to have a 660 or higher, and with no derogatories, no collections, no late payments in the last 2 years. If they're older than 2 years, don't worry about it. And not a lot of inquiries, but no collections or anything, like nothing negative on your credit report. And I know that seems like a high bar to reach, but business funding is more risky than personal funding. Business funding, because businesses, the numbers show that most startup businesses don't last 2 years, and those who last more than 2 years don't last 10 years or 5 years. I forget exactly the actual state, but so they're really scrutinizing your business to see if you're going to be around to pay this money back, because they're not doing it because they like you. They're doing it because they're making money off the loan. I get a lot of people asking me questions like, well, let me explain it to them. No, they ain't trying to hear that. They're not trying to hear your explanation for your situation. That's why you have to do your homework first. You got to know where you stand at. Where's your business at, and what's available to you um, for your business. Now, another business loan is the MCA. People hate to hear that word MCA. It's called a merchant cash advance, or sometimes we'll call it a factor loan. I call it a simple interest loan. Now, they are high interest loans, but they're business loans, and the qualifications are very liberal, and most businesses can get approved for them. Um, but you're going to pay for it. And I'm going to give you the scenario how I use it to help business owners that come to me that don't qualify for any of the other types of loans. All right. And that is your credit, it's got to be a 550. So you can have a 550 credit score and be in business and get one of these types of loans. The other thing they're looking for, the business has to be, you have to be in business for at least 3 months, and you have to make $10,000 a month. Now, I do have a couple of these lenders that will go down to 5,000. I generally don't like to go that low because they're not going to offer you very much. If you're only making $5,000 a month in your business, they're going to offer you 2,500, and they're going to charge you, probably 20%, and you're going to end up paying about 3,000 or 3,500 on something like that. It's just, and then I don't make any money. The bank doesn't make any money. It's not worth it. Okay, so and then another couple other little criteria they're looking for. They don't want to see more than 7 NSFs on your business bank statements in a given month or over that 3 months. So put your money in the business account, right? Use it for business expenses, but don't. I know a lot of people put the money in the business account and take it out and put it in their personal account. That doesn't help you. That does not help you. Okay, leave your money in the business account and use it like a professional business owner to pay your business expenses, pay your payroll, what have you. If you put yourself on the payroll, then you can withdraw that money and put it into your personal account. But you want to keep your business expenses and your business income separate from your personal income. You're a business person. It's time to act like it, okay? Now, other things with the MCA. So basically, you have to have your articles of incorporation. You have to be in good standing with the state. So you have to pay your annual fee and to be in good standing. And then have those 3 months bank statements, your articles of corporation, business voided check, business utility bill, or business bill. Okay, it doesn't have to be a utility bill. It could be a cell phone bill, it could be an internet bill, it could be a light bill, whatever type. Even if you work from home, put something in your business name. Okay, and then that's it. That's it. So hypothetically, say your business is doing say $30,000-$40,000 a month, right? And your credit isn't qualifying you enough to get you a traditional business loan, you can qualify for this MCA factor simple interest loan. Now, hypothetically, and when I've done these in the past, I do a lot of fast food restaurants like this. They'll get $20,000 and have to pay back 28, and it's usually daily or monthly. Daily or weekly payments. It's very rare to see someone get a monthly payment on one of those, and because they only last about 9 to 12 months. Now, yeah, that sounds scary. That sounds crazy. I got to make daily payments, but those payments are really small. So, in this one particular restaurant, last one I did, their payments were less than $100 a day, $500 a week. They only do it Monday through Friday, so you get the weekends off. But she got the $20,000 and she had payments. So it worked out for her situation. But what I like to try to take my clients through is get that money up front to satisfy the need for your business, and then work on the other parts of your business, maybe your credit, right? And get it in the next 2 or 3 months, 4 months, get you into a place where you can get a traditional loan that are lower interest rates and a larger amount, and you can pay off that high interest loan early. You don't have to carry it for the full 9 to 12 months. Okay, so you got to look at it like that. This is a stepping stone. You need money now to do marketing, infrastructure, equipment, whatever you need the money for your business for, right? And if your business is, if you're bringing in 10, 20, $30,000 a month, $100, $150, $150 a day in payments, it's not going to be significant. You're bringing in a few $1,000s a day. So that's the concept. That's the idea and the train of thought. Yeah, but it's a necessary evil, and you can use that to leverage yourself and put yourself in a better situation. And maybe it's you can use that money and you can use a portion of it to help fix your personal credit as well as start building your business credit. You know, I get a lot of people that when they come to me for those type of loans, I always tell them, give me, the money to I can start or helping you build your business credit, and then you won't have to keep coming back getting these, basically payday loans for businesses. But most don't listen because whatever. But my point is, if you find yourself in that situation and you need some money fast to do whatever you need to do to see your business keep moving forward, that is a good option to consider. And the qualifications and requirements are very easy to meet. Okay. Now there's other types of business loans, right? You can do anything from real estate to equity, accounts receivable, purchase order. A lot of those types of loans, like purchase order and accounts receivable, those are short-term loans. Now they may have lower interest rates, but you're only going to get 50 to 70% of the loan value of that your accounts receivable. So hypothetically, if your accounts receivable, say you got a client that's got owes you $100,000, right? But you need some money now to fulfill the order so you can get that $100,000. Okay, and I've had probably two of these in the last month where people had major contracts with like retailers, right? They was going to put their product on the shelf. The contract is worth $100,000, but they can't fulfill the contract because they need money to buy the supplies and things they need to fulfill the contract. So it's kind of a catch-22. So I go to my accounts receivable or purchase order, a lender, and they're going to say, okay, if the contract's worth $100,000, here's $50,000, and we expect to get paid back once the contract is fulfilled. So the contract needs to be fulfilled probably within 3 months, 4 months, maybe 6 months tops, but it's a short term. Now the interest rate is going to be pretty low though, so it's a good option. But knowing that you're not going to get 100% of the loan value of that purchase order contract is the important thing, right? Obviously, credit, they don't have a standardized credit criteria, but better credit, the better your chances of getting approved. Okay. Most times when people want to get that type of loan, they don't have all their things. They kind of, the last person's kind of stumbled into this and got a contract with a major retailer, put her product on the shelf, but she's, behind the eight ball because she cannot fulfill the contract without getting some money. So we're scrambling around trying to figure out, and all she's got is a kind of a promissory contract with some terms in it that suggest that this contract is going to be void in by a certain time unless you can fulfill or prove to us that you can fulfill the order. So those are some of the things you need to understand. What type of funding does your business qualify for? What type of funding are you looking for, right? And think outside the box. All right. Another thing I do for a lot of clients, they come to me and they want a business loan, but their business isn't altogether structured correctly, or they haven't opened their doors. So I will divert them to a personal loan. And right now, I just got a client last week. He's got pre-approved for $65,000 to $110,000. Now our quotes come back because they're kind of like pre-approved, a range that we can get them. But $65,000 to $110,000 in personal funding is a nice little bit of change to put into your business, right? And he wanted the business loan, but he didn't qualify for traditional business funding. And his credit was good. His credit's above 700, 720, 730, somewhere around there. He got good income. We can use your business income as personal income to qualify you for the personal loans and get you that money, and then you can use that money any way you want. And these signature personal loans are signature loans with low interest rates, and they're usually 3 to 5 year terms with monthly payments. So really ideal where you can use that money sparingly to invest in your business to boost up. Maybe you're using it for marketing, maybe you're using it for infrastructure, maybe you're using it for supplies, whatever the case may be, right? And there's no prepayment penalty on those loans, so you can pay those off earlier. All right, and I try to help my clients utilize that money without, don't spend it all in one place. Okay, that's what I'm saying. And I use that same tactic for real estate investments as well. You know, don't go out and spend all the money on buying what you need, but use it, strategically. So you have, first of all, you're going to put this first 6 to 12 months of payments aside, so you don't have to worry about that. And then you're going to use that rest of the money strategically to generate more revenue for your business. Okay. And hopefully, if you do it right, and within a year, you can have that money paid off and be, off to the races with your business. So that's what I'm saying. It's like you got to think outside the box and figure out what way do you need to go to get the money that you need to get your business off the ground or grow, or the necessary things you need to expand, to generate more clientele. Okay. Advertising is expensive. You got the infrastructure ready. You need more clients, but you can't afford to pay for Facebook or pay-per-click or those type of advertising tools that might cost you $300, $400, $500, $1,000. I know people that they're spending lots of money monthly on social media advertising, and you're going to spend the money, but those ads got to pay off. You got to see a return on investment. It's tricky to say the least. So I would suggest that you start with a small budget, like $300 a month, and put it into your Facebook ad campaign or your Instagram or something like that. And then once you generate several leads, that the money coming in for the advertisement is more than enough to compensate, then you can slowly increase it month by month, your advertising budget. All right. So there's little things like that to know about the funding world is, what your business type is, because there's some business types that are prohibited from some funding products. That's the one thing. That's another thing you need to know. What type of funding do you qualify? Does your business qualify with your credit the way it is? And what some other resources that you can utilize to get the funding that you need, such as credit cards or personal loans. So you got to think outside the box and be creative about how you're going to get the money you need to infuse into your business to grow your business. Okay. And like I said, the personal loans, you can use that for startups if you don't have no money, and just use that money to start your business, build your website, do a number of different things that you need to do. A lot of people are using that to get into the real estate game, find the property, that they want to fix and flip or fix and hold. That's a way to get some quick money without leveraging your credit cards or maxing them out. So, and then that's another formula for a business, right? You don't spend all the money. You don't use all the money that you get to purchase the house. You use the money to get it under contract, and you show that you have the money for the 10 to 20% that the hard money lenders are looking for, so they can finance the other 90% of the purchase price of that property and 100% of that rehab. But they're not going to give you that unless they know that you have the resources. So often I take someone like that, get them that personal loan, and tell them put the first 6 to 12 months of money payments aside. Find a property that meets the hard money lender's criteria, right? And they want to see that you have at least a 10% and probably another 3% because you will need to pay interest only payments for at least 3 months. So they want to see that you have that kind of cash flow in the bank that's not tied up in the deal, and then have the property under contract, as well as make sure the property meets the lender's criteria. They don't like to fund them nickel and dime deals like you buy a property for $20,000, $30,000, $40,000, $50,000, some lipstick on it, and it's only worth 60, 70, $80,000 after that. They want the ones that are really have the ARV in it. This least 75 to $100,000 after rehab value are more than what the loan or the purchase price was. So that's the type of research you need to know, not only what the bank is looking for, but what you're working with. And, at the very least, you can always call me, book an appointment, and I'll give you a free consult and give you this information. And then we can come up with a plan. We can come up with a plan to get your business going or get some money into your business. And, right now is the time to get your things and your affairs in order. If your credit ain't right, let's get it right. If you don't have business credit, start building business credit. If you don't have an LLC or S corp, your business structure, get your business structure. Get a professional email. Get a toll-free number. If you're going to be serious about business, you need your ducks in a row. Okay. All right. I'm gonna give you guys. Anybody got any questions? You can pop them in the comments or in the chat. I give it a couple minutes, but listen, the banks want to give you the money. They do. They want to loan you the money, and they want you to pay it back. So you got to figure out the game, know how to play the game, and get involved. Get involved. You got to have some skin in the game. You got to have some skin in the game. Nobody's gonna hold your hand and babysit you and finance your whole deal. That's not how it works. All right, you guys. I want to thank you guys for watching, and I hope this was beneficial. If it was, just leave a comment, share it, follow me on YouTube, Business Funding Now on YouTube, and or Facebook, Business Funding Now Facebook page. But I'm going to be here every Monday giving away funding tips on different funding products and services. So this is your chance to learn the things you don't know. Learn the things that the bank don't tell you. All right. My name is Jeremiah Davis. This is Monday Fun Day, and I'm the Funding Coach. Peace. See you next week.